All right, it's 6 o'clock right now, and I just want to welcome you all to another teaching, part of For the Black Kid organization created by Kennedy Johnson, and we would like to thank her for allowing us to be here today. If you attended our last, or you saw our last video, Growing Your Savings Account, you know that today we're going to be talking about building credit for your child. Is our September topic, and then next month we have a great one, making the most out of tax season, and then we'll wrap up our 4-class session in November with investing for the first time. But today we're going to talk about building credit for your child. Everyone knows credit is a very, very important tool throughout your life here in America. Credit is used just for about everything from job applications to financing homes, cars, even lifestyles, such as things like shopping, grocery stores, auto repair service. So credit tracks you starting at the age of 18, but 18 is not the age where you can start planning to have good credit. So today we're just going to discuss a few of those ideas, maybe strategies or tips that you can take into your life that you can start building credit for your child, and maybe even some for yourself. So first, we need to understand how much can bad credit cost you. I mean, it's very costly to have bad credit, especially to have bad credit over time. So, for example, we have this chart here. One customer who has a FICO score of about 770, and another one who has a FICO score of about 620. 770 would be considered as great credit, and 620 would be considered as fair credit. You see the difference in the mortgage payments because of this credit. You have $692 monthly payment for the person with the great credit, and $846 for the person with just fair credit. That also plays a role into their car payments. $461 for the great credit person, and then $538 a month for the person with just fair credit. Total monthly payments of about $1,153 for good credit and $1,384. Now that's $200 and about $30 a month. But over time, for 1 year, that's about $2,700, $2,700, and that adds up over time. If you have a car payment for 5 years, then you can just imagine paying an extra $2,700, a year on top of the car payment and a 30-year mortgage payment. So having bad credit can cost you. So it's very important that you take advantage, because you don't know how much money you're actually losing out on when you have bad credit. Here's another example of how much bad credit can cost you. So this is a mortgage cost. So if you want to take out maybe a house loan, or you want to finance maybe purchasing a property, here we have different ranges of FICO scores. So the 760 to 850, that's a great range. 700 to 759, good. 680 to 699, good as well. Once you start getting below that 680, that's when it starts becoming fair, and then possibly bad credit. And you see how the interest rate plays a role into your credit as well. So the interest rate is what the banks and whoever's lending you the money, this is how much money they're making off your payments. You have the principal payment for your mortgage. For example, for this, maybe a principal of about $300,000 for a mortgage payment for a $300,000 home. And then they make money off the interest that you pay. However, because the persons with bad credit, 620 to 639, they're more of a risk to lend money to, because whoever's lending the money, whether it's a credit union or bank, they take the chance of not making their money back to someone who have shown in the past that they cannot make their payments or make their payments late. They're more of a risk for these banks and these credit unions. So they offer you more of an interest rate as well. So you see, over the span of a mortgage lifetime, about 30 years, having just a score around 760 will just cost you about $371,000. However, you're almost paying almost $100,000 more over that 30-year span if you have a, bad credit around 620, 639. And $100,000 is a lot. And think about what you could do with that $100,000. And then investing that $100,000, which can turn into much more. So it's costs that you incur with $100,000 the missed opportunity for having bad credit, but also the possibilities of what you could have done with that $100,000. Yeah, so using credit to your advantage. Having bad credit is costly, but having good credit you can use to your advantage as well. Use it as leverage, which is another word for credit. Uh, you can get better deals on credit cards. Last month we talked about the great deals that credit cards offer, and how you can get very good cash back deals. Higher credit scores results in cards that offer better money back and savings deals. So depending on your credit, right now you may have access to maybe a couple cards offering from a couple banks. I know some of the higher end ones like American Express cards offers to people with good credit. They offer very good cashback rewards compared to someone like a secured credit card for someone or just starting out establishing a credit or who don't have great credit at all. The ability to refinance, saving you in thousands on student loans, car loans, and mortgages. So we're speaking about the children today. Someone who starts at the age of 18 with great credit, they can graduate college, refinance their student loans, so that interest rate that we talked about before, they can have the lowest interest rate and will cost them less interest over time. Even when they get their first car loan, put it in their name, they can refinance that car loan as well, and or when they want to make that first home purchase, if they want to purchase a home, they will have the lowest interest rate and possibly refinance over time, saving them thousands of dollars over the span of that mortgage. So having the ability to refinance is a great tool for people who have a really good credit. Even if you don't have good credit, you have the ability to refinance, but you may not get that low interest rate that I mentioned before. Possibility for more job opportunities. Now you may be wondering, like, why in the world does my credit has anything to do with my jobs? And well, it depends on what type of job you get. I know a lot of people who may deal with HR or accounting or in the finance industry. Credit checks are very important. As part of the background process, they want to see what kind of financial stress that you may be in. They also want to see if they are at risk putting that job, which possibly deals with money, moving money. Are you the type of person who may be put in a situation where you have to make a decision that could possibly costly? So it avoids the possibility of losing out on job opportunities as well. Is one of the pros of having good credit. So we're talking about the kids. We want to start at age 10 to 14. There's really not too much you can do prior to the age of 10 when it revolves around the topic of credit. Always plan out for your child's future. I would suggest that before the age of 10, you can figure out what's best. What do you think is best for your child? Do you want to save some money for their college? If they want to go to college, do you want to save money for maybe their first car purchase or their home purchase? So a lot of planning should be, a lot of steps should be taken prior to the age of 10. And even at the age of 10, those steps, they don't end there. Planning must continue. But it's best for you to start the education around money, around credit and spending. So at the age of 10, kids, they will start to learn their knowledge around credits and debits, meaning how much money comes in, when you get a paycheck or when you get a job, how much money leaves based on liabilities, bills, etc. It turns out that kids actually start learning their psychology around money around the age of 7, and it sticks around that age as well. So it starts before 7, I believe. It was like around 4, and then their psychology around money kind of sticks, and it just goes with them throughout life. Ends at the age of 7. So it's best to get a head start when it comes to just topics around money and how it works. So starting the education, let them know what a paycheck is, maybe what some taxes are. It's great that they could understand the topic of credit as well, and credit cards and paying back people that you owe. Saving for the future and explore options best for the family. Like I mentioned, are you the type of family that could afford to save for this college tuition? Maybe you can stash just a little bit of money away a month. That way that can go to a secured credit card or a secured loan, which we'll talk about later. And it's a great way to help them to establish credit as well. Age 15 to 18, authorized users on credit cards. So at this age, you want to start, you can start establishing credit for your children. So Age 15, a lot of credit cards, they allow you to add an authorized user to the card, meaning that parents, you can, if you have a credit card in good standing, meaning you're not late on any of your credit payments, and you have a fairly high credit limit on this card, you can add your child as an authorized user, meaning that these reports will start showing up on their credit score. Now, they won't have a credit score prior to the age of 18, but because they're a dependent on someone's credit, it will start kicking in and showing that this person is related or is linked to someone who's making good credit. So that is a great practice I would recommend for all parents starting at the age of 15. And that's when it starts and it doesn't end. There are people who are over the age of 18 who would love to establishing great credit or boost their credit. They can be added as a authorized user on someone who has a credit card in good standing. Start working and saving. A lot of jobs, not a lot of jobs, a handful of jobs will allow you to start working at the age of 15, especially at the age of 16. Once you start working, you will understand just the taxes and credit on paychecks. Also, you can start saving for establishing your secured credit card and your secured loans once you turn 18. Once you stash away some money a month, you can have starting at the age of 15. If you save for 3 years, you can have, let's say, $1,000, $2,000 that you can open up that secured credit card, which will shoot that child's credit score through the roof and have them start on a head start throughout life when it comes to establishing credit. Also, at this age, you want to understand that different scores appear for different loans. So the same score that you may see on your app or when you pull your credit report on Credit Karma, Experian, or if you pay to get your credit report from FICO, which you get one free credit report a year. It breaks down everything that these these banks and credit unions are seeing. You get one free credit report a year. But different scores appear for different loans. So if you're filing for a mortgage, that credit score is not going to that number is not going to be the same as a number that appears for your car loan or for a credit card loan or for a store credit card. So store credit cards are really easy to get. They're easier to get than like a car loan, a mortgage loan, or a credit card loan. So they do not affect your credit score as much. But those they're much more lenient on passing those. So understand that your scores are different for different loans. Now, starting at the age of 18, I mentioned that those secured cards, which are cards that has a limit that you establish with money you deposit. So for an unsecured credit card, you may go to like Capital One or Bank of America and get a credit card, and they just give you maybe a limit of $1,000. You didn't have to put that $1,000 in. With secured cards, which are popular at a lot of credit unions and some banks as well, they're also called student cards. It's great for someone who wants to establish credit, and you have that money, let's say $500 or $1,000. You give them that cash, and then they will store it in an account where you use it as a credit card against that limit. So if you have $1,000 secured credit card, you cannot go over $1,000, but that is your cash. So once you fill up, let's say you spend all of $1,000, you want to pay back that $1,000 and pay back that $1,000, and you still have your principal amount of $1,000 in cash. Meaning, whenever you want to close that secured card, you build your credit up enough to you trust yourself or you trust your child to move to a unsecured credit card, you get that $1,000 back. Secured cards are great methods for students, college kids, young adults to repair their credit or even establish great credit. Secured loans, almost the same thing, except there's no card attached. There are credit unions that have programs where you pay towards a certain amount every month. Let's say over a 12-month period, you want to pay $1,200, which is $100 a month. You can open up that loan. They will allow you to pay $100 a month to cover that loan, whatever you can afford, and then they will report these payments on your credit report. So it's nothing that you cannot afford. You guys, you and the bank, you and the credit union have already established an amount that you feel comfortable paying. Once you finish paying that loan off, they will close that account, report your good standing, and they will give you that money back. Those are called secured loans. And I suggest that all 18-year-olds who are paying any utilities, if they're moving out the house, maybe going to college, maybe moving out, maybe going to the military, Maybe they're just moving out the house and starting working. Have them report all utilities. It's very rare for someone not to pay their, their rent or their house payments. It is possible that your rent can be reported to your credit union, to excuse me, to the FICO companies, to the credit companies like Equifax, so they can report your utility payments, your on-time payments, and those can boost your credit scores. All that takes is a phone call to your whoever your landlord is, your apartment complex is, and then they will start reporting all your utilities to your credit score. One tip I have here is start multiple savings accounts for your kids, allowing them to have more funds to open up more secure accounts. So, for example, if you start saving at the age of maybe say 15 or even 13, and you have maybe $3,000 saved up by the time this child is 18 years old, that's three $1,000 secure credit cards that child can have, which will almost guarantee that child will have great credit starting out throughout their life. It's great to understand what affects credit scores. So your payment history and your capacity, which is like your credit limit, and how much of that credit limit is being used, affect your credit score the most. So it's very, very important that you make all of your payments on time. You might see a payment date when things are due. So let's say you have a car payment that's due on the 1st and you don't pay it to the 5th. Don't worry. Those credit reports of a late payment will not be reported as a late payment to those credit bureaus. They only go past 30 days. So you want to make that payment in 30 days for it to not to be reported to the credit bureau. However, you want to make that payment on time just in case whatever company you're financing through, whether it's your rent or your credit card or your car payments, they may have some of their own stipulations like a late payment fee. Capacity, your credit limit. If you have $1,000 credit card, you do not want to spend no more than $300. So it's funny how 30% of the capacity makes up your credit score. It's also recommended that you keep a credit limit of under 30% on all of your cards put together. So for example, if you have $1,000 credit card, you have 3 of them. So you have $3,000 in credit limit and you spend, let's say, like, it's 500 on one and then 200 on another and then 0 on the other. It takes your whole credit limit amount and combines them. It will not look at one card. So for 30% for $3,000 is about $900. So as long as you stay under that $900 threshold, it will not affect your credit score negatively. Other small factors are length of credit. It's very important that you are very timely when you want to open up new cards. It's great to have credit cards and credit loans, mortgages, auto loans. It's great to have those things, in good standing for more than about a year and a half to 2 years. Mix of credit. There are different types of credit. Like I mentioned, there's store credit cards. There are mortgage payments and several other forms of credit that reports you. So you want to have a great mix of credit that shows that you're a well-balanced person who, companies feel comfortable lending to. Accumulation of debt, a number of credit inquiries. You don't want to open up 5 credit cards or 3 credit cards consistently month after month after month. A lot of people, when they're going to purchase new cars, they are checking to see which car rate, which car loan is the best for them. That's perfectly fine. As long as you do that, you get all of your credit checks. They're hitting your credit with hard inquiries, which can be negative, but hard inquiries are when companies are checking your credit to see what you qualify for, what type of loans. Once they do that, you have up to a month to fill up those hard inquiries, and then that's when it will start affecting your credit score negatively if you continue to have hard inquiries on your card. And tips, we live in a digital era right now. Apps like Experian and Credit Karma help you break down how to utilize a credit score. If you don't have these apps, it's almost a guarantee if you're over the age of 18 to download at least one of these apps. It shows you what factors are going to your score, and also it shows you what methods you could do to increase your score. And also you can freeze your child's dependent credit. So this, just like 18 or above, you can freeze your credit if you do not want to use your credit, or if you're afraid. Is a great security method for people who maybe, open to fraud. Fraud may happen. Freezing your child's dependence credit is great as well. Like how I mentioned earlier, you can add your child as an authorized user. There are people who may get your child's name and social security number somehow and may add that child as a dependent on another loan, which will help them open up loans. So you can freeze your child's credit as long as they're under the age of 18. And that is something I would recommend as well. Are there any questions? That wraps up for credit. Credit is a much shorter topic because, credit is a much shorter topic because it's more so disciplinary actions that you have to take over and over and over again. Those actions are making sure you have your payments on time, increasing your credit limit. People who have good credit scores, can call in to their credit card companies and ask to increase their credit limit, which in turns increases your credit score because you're decreasing that amount, that 30% I mentioned, how much of your credit limit you're using. So these are actions that you must take over and over and over again, and eventually you will have good credit. Also, another tip I want to mention is if you have had bad credit in the past and you feel like there are things on your credit report that just won't seem to go away, it takes about 7 years for unpaid bills, unpaid credit cards to go off your credit report. But even then, it is still recommended that you pay those your outstanding balances, as well that you can write letters to your credit bureau. Let's say you have a home address change or something changes in your life where your past outstanding balance is no longer up to date. You can write a letter, which Credit Karma and Experian actually helps you draft up these letters. You can send it to the different bureaus, and they may be able to remove these negative inquiries on your credit score. Also, there are people who actually help with this credit. I know a lot of people may come off as fishy or like almost scams almost with the credit, but there are some people out there who are doing good work when it comes to helping people restore their credit. So do your due diligence and do some research on this person, see if you can get some reviews, and reach out to them if you are a victim of bad credit right now. But yeah, were there any questions? Alrighty, I want to thank you all for attending today, and I hope you enjoyed this video. And feel free to reach out to myself, Devin Saunders, or Kennedy Johnson for the Black Kid if you have any other information about financial literacy or any other questions regarding the topic. All right, thank you.